David Shapiro here, local Austin real estate developer, agent, and investor, to give you a market update on December of 2021. I've got Lee Abraham, our Senior Vice President of Agent Training and Acquisitions, joining us. Lee has a long history in real estate. He studied real estate in college. He has owned an appraisal company, an inspection company. He's been a licensed realtor for over 30 years. He's been an executive at a previous brokerage, and I am fortunate enough to have him here on our team. And I don't think I even told you this, but my lender recently said that another experienced agent in Austin said, holy smokes, how did David Shapiro get Lee Abraham to come over and join him? So
that's too nice.
Yes, so we're excited to have you going into 2022,
yes,
which is going to be an exciting year for real estate in Austin, another exciting year after a historic 2021.
Absolutely historic. We're going to break it down.
All right, so today we're going to cover the stats from December of 2021. We're going to go over our forecast for 2022, talk about the top 3 real estate news stories in 2021, and the top 3 real estate questions for 2022.
Okay, so let's dive into the statistics. We're going to start with average price. That's what everybody wants to know. What are the prices doing? And so this is looking at single-family homes for the city of Austin proper, and the average price in December 2020 was $685,497, and then wow, 2021, $797,696. David, that's a 16.4% increase. I mean, serious price appreciation, and we're going to break down why that's happening, but let's just look at some of these high-level stats.
And I think historically, prior to 2021, we were probably seeing, well, since the 2010 bottom,
right,
like an 8% average.
Somewhere in that range, depending on how you calculate it. Yeah.
Which was already stellar performance for the market. So
Absolutely.
To double that in 2021 is pretty phenomenal.
Off the charts. So now we're looking at the number of closed sales. And so this is interesting when you look at national, even regional media. They're talking about the market and the number of closed sales. Oftentimes it's construed that when you have fewer sales, it's an indication that the market's doing something. Typically the market's not doing as well. There's fewer sales. It's not the case. Let's take a look at the next slide. One of the reasons why there's fewer sales is, by golly, there's fewer listings. Almost 21% fewer new listings hitting the market in December of this past year versus 2020. And I think that's really important as we understand what's going on in the Austin market. We're going to break this down a little bit because it's all about supply and demand. And the supply side can be a bit abstract. And one of the things that media looks at is the monthly housing inventory. And basically, it's just the number of listings for sale divided by the number of houses selling. So if you have 1,000 houses for sale and there's 1,000 houses selling in a month, well, you've got a 1-month inventory. So what we're looking at here is different ways to calculate this number. Typically, ABOR, the Austin Board of Realtors, most agencies around the country are going to look at a 12-month average. On average, over the past 12 months, how many sales per month? So here we have 1,006 closed sales per month. Again, City of Austin, single-family homes only. When we did the numbers at the end of December, there was 481 active listings. 481 active listings, 1,006 sales a month. That's a 0.48 month inventory. So what we're looking at is, are sales increasing their pace over the last 90 days, which is the past 3 months, or the past 30 days, 1 month? And what we're seeing is that they're off a little bit in the fourth quarter, as well as the month of December, 952, 951 closed sales, less than 1,000. And as compared to the 12-month average of just over 1,000, it's statistically insignificant. The difference, bottom line, is however you cut the math, it's about a half a month supply of inventory. And that's historically low, generally unhealthy for the long-term stability of the market. But if you're selling a house, it's good news for you.
Yeah, and I think this is the indicator I tend to look at the most because it's real time. It's not a lagging indicator like some of the other ones. We'll post in the description a video that I did on March 2nd of 2020 where I talk about the declining inventory over several years, because this is a trend that was happening prior to COVID. And it's very evident when you look at some of these local market stats and charts. So on the right there, you can see This is the chart going all the way back to 2016, and pretty steadily inventory declining. And then this is pre-pandemic in January, February of 2020. It just starts to fall off a cliff, and then you can see that trend continues. And just to show month over month, I think it's even easier to see when you look at the numbers. 2018, a very strong seller's market, 2,400 homes on the market in December. And 2019, that dropped. 2020, once we're into the pandemic and everybody's moving all over the place, it drops again significantly. And then this year, wow, 825 homes on the market. Now, this is single family condos and townhomes, so it's a little bit more than the previous slide.
Right.
But a drop of 66% in 3 years for the inventory and 31% in the last year. So this is the supply side of the equation, which is what's really causing the prices to appreciate so much, is that there's such a limited supply because we're not building a lot of new supply. There's a lot of people moving here. In the last 18 months, interest rates have been really low. So people have refinanced and decided to stay in their home, especially because it's so hard to buy. They're like, well, I'd like to upgrade and get a bigger home, or I'd like to, but it's so challenging to buy, I'm not going to move.
Right.
So it's this cyclical thing we have going on.
Right.
And then just as I was diving into the numbers, I was curious anecdotally what we've been seeing with downtown condos as we're working with clients there. And so I was like, what are the stats showing there? So this is a pretty interesting, I didn't restrict it to condos, but there's basically only condos downtown Austin. And this is the MLS area, which maps up to like basically MLK, I believe it is, and down to Cesar Chavez. In 2020, it became very undesirable to be in a condo when you're close to your neighbors because of the pandemic.
Right.
Toward the end of 2020, and you can see here we kind of hit where it probably should have been, and I highlighted that in red. So you can see the inventory in 2020 is much higher, 225 condos on the market versus 145 in 2019. So that's where we're seeing up here where it peaks, and then it starts to come back down, and it hits about where it should have been, where you have 124 condos in the market in 2018, 127 in January of 2021, and then all of a sudden it's more desirable. And, vaccines are out, people are ready to get back to living their urban life, and now we're at a point where there's only 29 condos on the market downtown. This is incredible. I mean, you look at previous years, we've never had under 100, let alone 29.
Yeah.
So somebody looking downtown right now has to, one, be very patient, and two, be very aggressive. And we have some strategies for buyers that are looking downtown where we're going around just waiting on the MLS and drumming up some off-market stuff. So if you're thinking about downtown, something you should definitely reach out to us about, because despite this, I think it's very possible to buy downtown, get something you're excited about, and hopefully there'll be some more inventory coming online here in the spring, but a lot of it might be transacting offline.
Right.
And then this is a little bit because I own 2 condos that are very close to downtown, but not technically in that downtown area. So I mapped out what I would consider, you can see there on the top left, very close proximity to downtown, walkable for many of those areas to downtown, very desirable neighborhoods that there are some condos in. Not as many as downtown proper here, but just to kind of show you the trend, it's very similar for condos in this area. And there's only 15 on the market as of December. Again, not as many condos in these areas. It peaked at 124 and down to 15. So if you own a condo in one of these outlying areas, you should be doing very well heading into the buying season here in 2022. If it's something you decided you wanted to sell, or maybe you want to refi and try to get some cash out.
Okay, so now we're looking at the days to sell. And so we've been talking about supply, now we're talking about demand. So one of the ways to measure demand is to look at how long does it take for a home to sell. 26 days was the number in 2020. Not a huge drop down to 23, but when you do the math, that's 11.5%. Downward days to sell is an indicator of upward demand, and that puts upward pressure on pricing. So our market forecast, these are just some high-level forecasts that we're making in terms of what we believe the market's going to do, starting with the historically low housing inventory to continue.
Strong demand to continue, the momentum that the market has with all these companies moving, jobs coming, people still wanting to be here, that's going to continue.
And price appreciation, it's going to continue, but at a more moderate rate. What is that rate? Well, more important to you as a buyer or seller is the price change, the price elasticity of the property that you're buying or selling that's operating in a market. As David said, historically, anywhere from 7-8% is kind of on par with Austin. We're looking at double digit over the past year. It's going to be strong appreciation, but the key for you as a consumer is to either be buying or selling at the right price for your particular property rather than broad market trends for your personal real estate investments. So now we're going to take a look at what's driving the supply and demand that we've been breaking down. And David, to me, the number 3, we're going to go over the top 3 stories. Okay, so we're building a sense of anticipation as we go from 3 to 1. Okay, so we believe that this is the number 3 top story, and it's working remote. And what you're looking at is a picture not so much of working from home, although it could be, but more of a co-working sort of environment. So what does it mean? Why is it important to our market? Well, number 1, it's expanding the footprint of desirable property. People are no longer bound to that close proximity to work. They can live anywhere. And that's huge. And that really affects the supply side that we were talking about, kind of opening up some supply, and has some other implications as well as the design of the home, people who are working from home. And so we believe that this is a really important trend, not only for the growth of real estate, but for the enjoyment and livability of property in Austin. But one other thing that I think is really interesting as some of these trends converge with the working remote is the Airbnb phenomenon, David. I think that as the owners of the Airbnb properties are presenting their property to the market, making it functional, easy to use for people that are going to be in the property for a week or a month, but working, and setting the amenities up for a home office, things like that, I think is really important.
Totally agree. Yeah, the vacation rental manager that
Right.
we work with, we talked about this trend and recommended that
Right.
there be a standing desk
Yes.
in each of these properties, whether you put it in a dedicated room
Right.
or maybe it's somewhere under in a cubby somewhere so somebody has a spot for
Right.
that, with a standing mat, a yoga mat. And I'm just thinking of some of the things I've needed when I've traveled here in the last year. It's like, well, I'm going to work out from home. I need at least a mat so I'm not like on the hard concrete
Yeah.
floor so I can stretch and all these
Right.
things. And they're pretty inexpensive to add to a property. But when somebody's browsing and they're like, well, I'm going to be there a month and I'm going to be working, this thing has a standing desk.
Yeah.
It has, some of these minor things, they really do make a big difference for people that are going to be working remotely.
Yeah, and I think the Airbnb, the short-term rental, the more we work with our investors, the more viable that is as a revenue stream, that these trends converge. And, that's what we're here to do, is to give a little insight on how that works.
Yeah, we've got our fingers in all sorts of these different things and seeing it firsthand with our clients and some of our own properties, depending on the different type of investment thing.
Right.
I think between the two of us, we've tried every sort of investment thing.
I think
in real
that's
estate.
probably correct. So now we're going to take a look at the number 2 top news story for Austin real estate for 2021. It's Project Connect.
Yeah, this is something that's very exciting for me. I am on actually 2 committees right now involved with Project Connect. Well, one is with Cap Metro in general and one with Project Connect. I was very excited when the voters of Austin pushed this through. And, it is tough for some people to think, okay, well, it's going to take 9 years for them to do this. And what the heck is the world going to look like in 9 years in terms of technology? But I think overall, it'll be a big positive for the city. The blue line there, if you're not familiar with Project Connect, I'll quickly give you an overview. So the blue line, which starts in the southeast here at the airport, and it's going to be like right out the front door of the terminal. You can hop on this, go across Riverside, and here, this is, Riverside Drive, going right to 35, crosses over, and then in Travis Heights, it's going to go cross a bridge into a tunnel in downtown. So you can be from the airport with no traffic and not that many stops, be right downtown at the convention center. So maybe you're not going to use it because you live in Southwest Austin or Northwest Austin, but this is going to alleviate traffic from the airport for all of the people coming for conventions and conferences that are staying at a downtown hotel, because our downtown's pretty small. You pop out of this train and you're going to be an easy walk or a bird ride or whatever to your hotel. There, it's going to meet up with the Orange Line, which comes here down Congress. That's going to go underground right here somewhere on South Congress, TBD where that is. And then they're going to go together for a bit, and then they're going to separate out again in North Austin. So those are the two main things. In addition to the train, light rail, blue line, $3.8 billion, green line, $370 million, the tunnels, $2 billion, red line improvements, $25 million, rapid bus service, $170 million. So it's going to be a huge overhaul and add a ton of availability for lots of people that currently don't have access to good public transit along some of these lines. So pretty exciting stuff.
So one of the projects that is possible because of this transportation plan is the Uptown ATX project, which is a $3 billion mixed-use redevelopment of the IBM campus over by the Domain. 7 million square feet of office, residential, retail, and hospitality space. Ties into the Q2 stadium for the soccer team, the football team. All of these dynamic interactions are not only building our infrastructure, inbound migration of dollars, but it's also relieving the burden on the traffic, which is key. And that's why we selected Project Connect as our number 2 story for 2021.
Yeah, it's going to be this uptown development. It's going to be right next to the Domain. It's going to really complement it well. It's going to have a metro stop that they're building in right there. And of course, the Q2 stadium's right there. So there's a ton going on in that area. Number 1 story for 2021 is the inbound tech migration. And here you can see, I mean, there are tech campuses and headquarters, not necessarily all tech, all around Austin. And often people will come to us and say, well, which part of Austin do you think we should buy in as an investment? Like, where's growing? Mm-hmm. I mean, if you look at this map, it's like, just pick anywhere on the map. There's something going on. And that's why it's really hard to pick like the best area in Austin. I think when you bet on Austin, that's your horse. You don't really need to get too specific.
Right.
Within there, if somebody's buying a home, then there's lifestyle decisions based on commutes to work or things that they want to be close to, gyms, Barton Springs, other amenities. But outside of that, it's a story that you like. So do you like the story of Oracle moving their headquarters right over there to Riverside and Project Connect coming across there? That seems like one great place. Do you like the Samsung $17 billion facility out in Taylor?
Yeah.
So you want to go up to Northeast? Or, I mean, you can just all over the map here. And the number of campuses and announcements are just crazy. The only place that seems to be lacking is Southwest Austin. And this is one of the best school districts down here and more affordable than Westlake. So this still has a ton of pull for other reasons. So I just don't think you can really go wrong.
Yeah, no, it's a safe bet, and the momentum is only increasing. $17 billion. So we're looking at this chart and we're seeing the logo of some of the various companies that have invested in Austin. What we're not seeing is the relative size of the investment. And in some of our future market reports, we'll be breaking that down.
And the Samsung facility, so this is a different Samsung facility that's already in existence. The new one is not on the map.
Correct.
It's up here in Taylor.
Yeah. And so we have some forward-thinking investment strategies for people that not only want to be in the trend, but ahead of the trend, ahead of the path of growth. And this is the type of thing that we're digging into on a daily basis. Let's take a look at the next slide. So it's not just companies that are migrating to Austin, it's their people. And it's the people that are supporting those companies. So when we take a look at the top areas of inflow of tech workers, well, Austin's number 1. This is per 10,000 LinkedIn users, 217 out of every 10,000. So, I mean, it's a significant number, 25% higher than Nashville. Charlotte, they just got some big news on the triangle. Serious investment dollars going in there. Bottom line, without getting too caught up in the individual numbers, is people are moving to Austin, tech companies are moving to Austin, and what that's doing is fueling the demand for real estate in Austin.
Yeah, it's interesting to see the numbers so blatant where like we're doubling Dallas and Vegas and some of these other places. Mm-hmm. And it seems like every podcast or news thing I pull up and you talk about real estate and what's going on in the real estate market, Austin is always mentioned, or tech, or some of these different trends. Austin is the epitome of all these things. And it's cool to be a part of it and be here.
Absolutely. So I find this fascinating. So when we take a look at where people are going to, we just looked at Austin being number one. Well, where are these people coming from? So it's no surprise that the tech industry, San Francisco Bay Area, is the number one source of inbound migration into the Austin market area, followed by Boston, Chicago. And when we start looking at our final question, we're going to have three questions after we look at these stories. Is price appreciation going to continue in Austin? I'll make the point now, which is that its value of property is a relative thing. It's compared to what's selling in the market, what's happening in the hyper-local community, but it's also a function of your resources and what you're used to. Well, we know that the tech employment base is a well-compensated base, and they're coming from areas that have significantly higher prices. So when these folks are moving to Austin, there's a built-in formula for price elasticity because they're used to higher prices. They have the means to afford higher prices, and that just makes for Austin to continue to go upward. Now let's take a look at the top three questions that we're being asked, David.
So is Austin overpriced? What are the impact of mortgage interest rate increases going to be? And will home prices continue to rise? So is this a good time to buy and invest in Austin? Is Austin overpriced? So this is from the National Association of Realtors, and this is ranked by market. And so you can see over here, as of 2021 Q3, the highest median price was in San Jose at 1.65 million.
Mm-hmm.
And then you can see the chart, goes down, and there's places like Seattle and Boston. There's areas of New York in here, Denver, Reno, Nevada. Nevada, sorry. Newark, Fort Collins, Colorado, and then we get to Austin.
Right.
So Austin has a lower median price, and this is the metro area. It includes Round Rock at just under 500K, and you can see it fluctuates from quarter to quarter based on seasonality.
Mm-hmm.
But it is lower than all those markets, and it is a third of the most expensive market here with San Jose. And so it's, even though the prices are up 33% from a year ago,
right,
still significantly less expensive than a lot of these other markets. And the thing is, we're not operating in a vacuum. So it's 33% up. Oh my goodness. Well, the top market was up 17% still. San Francisco up 20%.
Mm-hmm.
So some of these markets are still up 20%. So we're outpacing them by double digits. But when you're that far behind or ahead, depending how you're looking at it, at the median price, it's somewhat insignificant for these people coming from some of these areas, and it's still a bargain in Austin. And this is only one aspect of them moving here. Then, of course, you have taxes.
Mm-hmm.
So they're coming from places where they're paying 13% in income tax. And then the cost of living overall is lower. It's just a better quality of life. Some of these places, like here, I grew up in the Bridgeport, Stamford, Norwalk, Connecticut area. And not only is it less expensive, but the weather is just better.
Yeah.
People are friendlier.
Bottom line is Austin overpriced? It's a relative question. But when we're looking at the bigger picture, the answer appears to be no. Okay, so the number two question that we get is what's going to happen with interest rates, David?
Yeah, and just to show, for some of you that have been in the real estate market in the last decade, rates have been pretty much low this entire time. They started to, as the economy improved, they raised them a little bit here in 17, 18. But just to give some perspective, I bought my first property in 2006, which is right here. So a bit higher. And at that time, I got a 6.25% adjustable rate mortgage. So meaning my rate adjusted every year. So that generally is a better rate than if you get a fixed rate mortgage for 30 years. So if I'd gone fixed rate, it probably would have been like 7.5%. Mm-hmm. And so I was like, well, shoot, I don't know how long I'm going to own this house. I'll take a 5.1 adjustable rate mortgage. And so that was at 6.25%. And now you can get a loan for 3% fixed for 30 years.
It's unbelievable. Okay, so let's shock some people. Why don't you show everybody when I started in real estate? So that was 1982.
1982.
So if we take a look at 1982, interest rates were 17, 18%. And that's the market that I started in. I graduated from college in 82, studied real estate, and was an agent right out of college. And so put two and two together, well, sure, I focused on expired listings. And I bought my first house, David, when interest rates dropped to 12%. Okay. So what's going to happen with a rate increase from 3.5 to 4? Let's talk about it.
Okay, pretty simple mortgage calculator here. All right, $100,000. So nobody's going out and probably getting a $100,000 loan in Austin. But just to show you the increment of on $100,000 or per every $100,000,
Right.
What does a change in interest rate do? So if we were to go from 3 to 3.25, we have a $435 monthly payment from I think it was 422. So that quarter point is a $13 for every 100,000. So
right.
You can it's roughly equals out if you want to say, hey, I'm going to get $1 million loan, multiply times 10. So it's $130 per month.
On a quarter point.
On a quarter point, which is probably what we would be looking at for one rate increase.
Right.
Okay. If they do a second rate increase and prices and rates go, and by the way, we're being pretty broad here. The rate increases, are indirectly tied to interest rates. But if it goes up to 3.5%, now what do we start at? We started at 422, and now we're at 449.
Just under $30 or so. Basically, what it boils down to is that it's going to be about $500 or so on every 100,000 per point. So if we just do a 1% increase over the 3,
we go from 422. So this is kind of like I would say a worst case scenario for 2022. It's hard to imagine rates are going to go up a full point.
Right.
So we go from 422 to 477.
Yeah.
So $55.
$55.
So on $1 million, that's $550 a month.
Yeah. So the question is, as you're forecasting your situation for the new year as a buyer, what's this mean to you? And one of the things that I thought was really interesting, one of the articles that I was reading, is that as rates go up, wages are also trending up. And so there is kind of an unseen trend with the wages largely offsetting a potential increase in the interest rates, particularly with the homeowners in Austin that are going to be buying homes. So bottom line, let's just cut to the chase. Are the mortgage rates going to drop the bottom out of the real estate market? The answer is absolutely not. Will some of the people at the lower price points that are really at the high debt to income ratio have to get a little more creative? Yeah, they will. But don't let this scare you from not buying a home. That's the bottom line. Don't let this scare you. From my perspective, anything under 12% is pretty good. Okay, so now we're ready for our final question of today, 2022. Are home prices going to continue to rise? So if you've been with us from the beginning of this report, you already know the answer. We believe that it's yes, particularly here in Austin. Prices are going to continue to rise. And if you look at the trend, maybe you can break that down a little bit in terms of a long-term perspective, David.
Yeah, I think with real estate, one important thing is to have a long-term outlook. And
right.
So sometimes people will come to me and be like, am I going to make money on this deal? I'm like, are we talking about the next 18 months or the next 10 years?
Right.
If we look at 10 years, yeah, I can nearly guarantee that you're going to make money on it, and especially in a city like Austin, because here's the peak in 2007-ish for the real estate market. And if you said, okay, well, how long did it take to get past that peak again? Well, if you go forward 10 years to 2017, I mean, you're back above that.
Right.
So as long as you have a 10-year outlook, if we're at another peak and we all of a sudden see this thing plummet, 10 years from now, we should be back above that. And any 10-year period going back, you can say the same thing. So having a long-term outlook, I think, is important. Another question I get around this topic is, well, prices are up so much in Austin. Should I be looking somewhere else for an investment? Should I go to Taylor or Buda, any of these other suburbs around Austin? Certainly you can. That is always an option. I have always taken the stance that people moving from other parts of the country, they don't know where Buda, Texas is. They know where Austin, Texas is, and that's where I want to be owning. And I believe that the story of Austin is just begun, that 10 years ago, yeah, that would have been great if I put all my money in Austin real estate 10 years ago. But today is another chance to do that. And I think the next 10 years are going to be equally as historic here in Austin. I love Elon Musk's quote that Austin's going to be the biggest boom city of the century.
Wow.
And so we're seeing that play out in front of us.
Right.
So I think there's still an opportunity to buy in Austin. and depending on what somebody's trying to accomplish. Now, if price point is an issue and like you can only afford to buy a $400,000 investment property, that's going to force you to probably go outside of the city limits and do something. But I believe that if we do see a downturn, Austin's going to hold up better than the surrounding areas. And if you look at the top zip codes based on price appreciation in Central Texas over the last decade, the majority of them are in Austin zip codes. So picking Austin is a better bet than trying to pick, okay, which one of these places is going to be the next boom. Now, if you could have gone out to Del Valley in the areas near the Gigafactory and knew that there was a Gigafactory going to go there, you would have made a killing. Once they're announced, then people know, and then the rush is on. We have an interesting story. Susie and I went to go look at houses for her before she was on the team near the new Apple campus. This is going back about 4 years ago. The announcement was made on a Thursday, I believe. We went up there on a Saturday, and we had to wait 45 minutes just to see the sales agent. And they told us once we finally sat down with him that they normally sell, I think it was like 10 homes a month at this community, and they had sold 10 since Thursday. And so we were, all right, well, we put down a deposit. We found a home right then. It happens so quickly, you can't really predict. And prices went up pretty drastically from there in that area. In absence of where the next announcement's going to be, we can talk more about strategy based on each individual's goals and desires. And, for me, convenience is really important. I don't want to drive, 45 minutes to see the property. I want to keep it within 15 minutes. And I don't have a good thesis that driving 45 is going to get me a better return. So why would I do that?
So here's the thing. One of the things that is important to keep in mind is we've been mostly talking about owner occupancy on properties, a little bit Airbnb revenue stream. But when we're looking at long-term investing, we can take a look at some opportunities that we have, not on the buy and hold of investment property, income producing property, but what's known as speculating on real estate. And so when we take a look at some of these things that might be known, for example, it's known that Samsung is investing $17 billion up in the Taylor area. However, even though that's known, and even though there's been an increase since that's become public knowledge, there are tons of opportunity for individual investors to go in, acquire property, speculating on where exactly the growth is going to be in that sector. And I think for folks that have substantial resources that are looking to diversify your portfolio, there are some very strong plays on the perimeter that we're actively investigating for folks that want to be on the front end of where the trend is going. I think that's really important. A lot of major metro areas don't have that opportunity for land to expand into. And as we look at the corridor between Dallas and San Antonio, Austin in the middle, it's a no-brainer. So just something to keep in mind depending on your objectives and timelines. So this is specifically Austin MSA, the Metropolitan Statistical Area, and it's kind of mirroring some of the timelines, that 2007 to 2011-12 Great Recession that we had. And again, during that time frame in Austin specifically, there's never been a 10-year span where prices failed to go up. And so will home prices continue to rise? Is this a good time to buy or invest in Austin? Again, the answer we believe is absolutely yes.
To wrap up here, 2022, like every year we've chatted about previously, I feel like I'm always beating the same drum. It continues to be a good place to own real estate in Austin, Texas. So if you currently own something, and you want to sell because you're trying to take advantage of a hot market, you need to know where you're going and what you're going to do with that money, because potentially your best investment is going to be just to hold on to that property. But, reach out if you're thinking about selling. We can evaluate, what we think the property would go for and what your other options are. Maybe you're looking to move to a different part of the city that isn't as hot, and we can do that evaluation for you. If you're thinking about buying, yes, it's challenging, but we have successfully, every buyer that's come to us, put together a plan and a strategy and executed and helped them get a home. We haven't failed yet.
Yeah, no, it's challenging, but that's where expertise comes in. We do bring quite a bit of firepower to the competition, if you will, on the buying side. And it's not just numbers. A lot of times it's communication skills, rapport being able to build relationships and build on the great relationships and build on the outstanding relationships that we already have with many of the local agents. So with that, we'd like to thank you for your attention on our market report. We always love to hear from our clients and others in our audience. If there's specific questions about Austin real estate investing, feel free to drop us a note, let us know how we can be of service. And again, we just appreciate you being here, and we're really excited about 2022.
Thank you again for joining us. I'm David Shapiro with the Shapiro Real Estate Group. Please comment below if you have any questions, subscribe, like the video so we know to put out more of this, and please don't hesitate to reach out if you have any questions.